given the data we've seen over the past week or two, I would say that it's more than likely, given what we're seeing in the Fed funds futures here, the Fed is done. I would say currently I would put it about an 80% probability that the Fed, that the hike we saw this past month was in fact the last hike of this cycle. I actually do not believe the Fed will hike again this cycle. I think we're actually done.
Do you think if we're at the terminal rate now, do you buy what he was saying about, keeping things tighter for longer? Because even if it's terminal rate, it doesn't mean we're necessarily close to a pivot.
That's right. That's right. So that's, I think, is going to be a lot determined in kind of the incoming data and how the incoming data looks like. But as you can see by what the Fed funds futures market is pricing in now, they're pricing in a very low chance of one additional hike into the end of the year. But then really what we're pricing in is a lot of rate cuts into next year. In fact, they're saying there's going to be around 125 basis points of cuts into next year, which is very likely going to be due to a recession. I mean, that's kind of what the bond market is telling us right now. And, the market is celebrating that, or at least for now, it's celebrating that because they're seeing the bad data as type of, okay, so that means the Fed is done and it's not hiking anymore. But the biggest question we have to ask is the market actually wrong for wanting the labor market to soften? Like, is the market wrong for wanting the data to go bad? Because right now they're trading this bad news, good news narrative. But the question is that actually the right thing to do based on what we've seen historically?